Hello and welcome to Market Domination. I'm Allie Canal, live from our New York City headquarters. Breaking news on tariffs. President Trump reportedly extends a tariff truce with China, potentially stabilizing trade ties. And separately, an extremely rare move between private and public sectors. AI chip makers NVIDIA and AMD agreed to give the U.S. government 15% revenue from some sales to China. We're getting you up to speed on the complex and global implications. On Wall Street right now, there's just an hour to go until the closing bell, and stocks are trading to the downside. We see losses being led by the Dow, off around 200 points. The S&P 500 is trading around 0.1% lower. Same with the tech-heavy NASDAQ 100. Well, let's welcome in Macro Talk News founder and Yahoo Finance contributor Hope King, our tech editor Dan Howley, and data and markets editor Jared Blickery. They'll be joining us throughout the show to break down these headlines. So Jared, let's start with you here. We're seeing some losses in equities. What does that tell us about the session trading today?
Well, it's not too bad in the S&P and the NASDAQ, but let's start with the Dow, which is leading the way down. By the way, it's not even off half a percentage point. It's off about 200 points, as you said. You can see it's pretty close to the session lows. We opened up in the green territory, just barely turned green after a little bit of a downturn around the noon hour. But we are currently sitting down about 195 points as we speak. And here, if we take a look at the NASDAQ, we were green most of the day. In fact, closely after the open, we got a record intraday high on the NASDAQ composite, also the NASDAQ 100. We're going to be taking a look at that heat map in a second, but now we are just in negative territory, nothing to write home about. Also want to show you the Russell 2000, small caps also kind of treading water here, so not a big day in the major indices or the small caps for that matter. And just taking a quick look at the bond market, we have 10-year yields down just 1 basis point, very small amount, to 4.27%. The 30-year T-bond, which is more closely linked to mortgage rates, we got that at 4.84%, and the U.S. dollar index just up a smidge there. But let's check in on the sector action, and we see an interesting combination at the top. Communication services, consumer discretionary, and healthcare. Now, communication services is actually Meta and Alphabet and a bunch of others. Consumer discretionary is an Amazon story and Tesla. We're going to see Tesla in a second. That is up nicely. To the downside, though, energy taking a little bit of a hit, and also tech. It's been interesting to look inside tech today, and we'll also break down what's happening in the chips versus software. Here's NVIDIA up 11 basis points, but I was talking about Tesla. That is up 4% to $342.77, but a little bit more red on this board than green. And I'm going to show you an interesting dichotomy here. Here's the software board for today. We see a lot of red, Intuit down almost 5%, Salesforce down 2.5%, so is IBM. But then you take a look at the semiconductors off of that favorable news that we're going to be breaking down here today. A very different picture here. ARM up 2%, Micron up 3%, so is Intel. So I'm going to leave us here on the Dow, where we can see, again, more red than green in this particular index of 30 stocks, but we're seeing some leadership here from Procter & Gamble as well as United Health, both of those up more than 1%.
Yeah, Jared, interesting to track those moves in tech. And Hope, CNBC is reporting that President Trump is extending the U.S.-China tariff truce by 90 days. This is, I think, the third extension at this point. What are your thoughts about where that leaves the trade war?
Exactly. I think you just hit the nail on the head, which is this is the third or fourth time that we've seen multiple, not just in this relationship between the U.S. and China, but with other countries around the world. And you also mentioned earlier, Ali, that this is really about or separately from the NVIDIA AMD, I actually think they're potentially linked. I mean, think about the timing of the news coming out over the weekend, plus this truce or this pause, if you will. You gotta think that something was going on in the back end with both of these, with the countries and these private companies. I do think, though, from everything that we've seen from the second administration, these types of delays are the norm. But this new deal between the private and public sector, this is definitely something new and shocking.
Yeah, and Hope, you brought up that AMD NVIDIA news. And Dan, I want to bring you into this conversation. NVIDIA, AMD, China chips, two companies that will give 15% of their China chip revenue to the U.S. government. What kind of financial impact could a deal like this have on their bottom lines? And it got me thinking, is handing over around $3 billion or so in change to the government worth it if it means resuming sales to China?
Yeah, so far, analysts are saying this is kind of, the price of doing business almost. If it gets them back into the Chinese market, then that's huge. They're not ceding it to the likes of Huawei. They're ensuring that NVIDIA and AMD are still in there. I think one of the things that folks pointed out was, look, yes, it is 15% of sales, but it's better than nothing. The other thing is that there could be a new precedent that's being set here, and that's on the downside. Does this mean that other companies will have to pay, and what does that mean for other chip manufacturers that want to sell into the Chinese market? So I think it's kind of a double-edged sword at this point. When you look at NVIDIA overall, though, you're talking about, like you said, $3 billion. It's not a huge hit to them, especially since right now they're not accounting for any China revenue, and they were expected to have take a hit on tariffs in the current quarter, in addition to the hit they took last quarter. So, we could see this start to pick up when they start to ramp back up as far as selling in. Now it seems as though we're starting to get that kind of ball rolling when the announcement came that they were going to be able to start selling again about a month ago. It seems like it's going to start in relatively short order. I say relative because the chip industry moves slowly, but it could be something that we start to see maybe in Q3, maybe in Q4 on the balance sheets.
And Dan, you're just talking about some of that analyst commentary, the precedent that this could set. What do you think this means for the wider semiconductor supply chain?
I think it means they have to be aware that this is a possibility for them as well. It's not just NVIDIA, it's not just AMD. If you're going to be selling chips into a market like China that are high-powered, not even necessarily high-powered, the ones that they sell into China are degraded compared to what they have for the U.S. and its allies. But I think if you're selling a chip that deals in this kind of area, a sensitive area like AI, you may have to pay this kind of fee to be able to continue to play in that space and generate that revenue.
And Hope, what's your opinion and thought on the precedent that this sets, not just for these big tech companies, but maybe some of those smaller players as well?
Yeah, I think it depends on how critical the companies are. I think NVIDIA, AMD are critical to the global supply chain of AI. I think if you look at software makers, if you look at other types of companies, if they are not as critical, I don't think these deals will actually come to fruition. One thing I think a lot of investors should be looking out for is just how much of this cost is actually passed on to China. So if NVIDIA and AMD are now having to pay the US 15% of those sales of those new advanced chips through the new export controls being lifted. If China can pay, of course, they will then boost the top line for both of these companies. I think the bigger picture here, the big macro picture here, is that both of these companies are basically ping pong balls in this trade war, in the geopolitical tensions. Again, I mentioned at the top here that the timing of the tariff being put on pause for China is coming around the same time that this announcement is being made. I really don't think that that's a coincidence, and I do think we need to look at the timing very, very closely to see exactly where the administration is thinking about placing all the chips on their board.
All the chips on the board, no pun intended there. Everyone, thanks so much. We're going to continue to be tracking this throughout the show this evening. Well, President Trump reportedly extending the tariff truce with China for 90 days. That's according to CNBC. We have Riva Gujan, Rhodium Group Director. So, Riva, we were just talking about this. I want to get your opinion on where we're at with the China trade story and what you make of yet another extension here.
Well, this takes transactionalism to a whole new level. If we look at the 15% slice off the top of what we're looking at with the Intel AMD understanding with the administration. But keep in mind that the administration is kind of selectively applying a sort of sliding scale approach to chip controls at this point, meaning, if Chinese indigenous companies like Huawei have a competitive product like the Huawei Ascend chip to NVIDIA chips, the idea is that then US technology should be able to compete head to head with Chinese tech firms. Now, how far does that sliding scale actually go? Right now, we see it's open to the H20 chips, which are optimized for inference. And that's where the administration is assuming, okay, inference compute is not where we are concerned at the moment. But what does that mean for example, high bandwidth memory chips? China's going to be pushing for an easing of those controls in the bilateral. That is going to be something that strengthens Huawei production, which does not work in NVIDIA's interest, for example. Also, when it comes to the tools to actually manufacture semiconductors, right? So the semiconductor manufacturing equipment providers, they may try to latch onto this and say, well, us too, we need to be on a sliding scale approach. So ASML, Tokyo Electron, et cetera. But does that really help the U.S. Interest in constraining Chinese chip production? Not exactly. So this kind of opens up a slippery slope of where you apply controls, where you don't, how transactional do you get in the end?
And Riva, considering we do have another extension, what's your read through there when it comes to whether this is good news or bad news? I guess I would read this as potentially good news that we could see a solid deal with China, but what is your perspective there?
Well, obviously we're on the road now to a US-China bilateral summit between Trump and Xi. So if we were just to imagine for a second, what does a grand bargain look like between the US and China? You can see several components here, right? One is kind of a spinning of the macro narrative, where the US has been saying, look, we want to see this great rebalancing of China consuming more, the US manufacturing more. And China's having a really interesting internal debate right now on involutionary competition, on how to address overcapacity. The thing is, that debate is very limited in what sectors it applies to in the Chinese context. And the Chinese solution to overcapacity is to export more. That actually that produces bigger trade imbalances. So we need to watch if the administration tries to basically chalk up a win and say, hey, look, China's talking reform, we're moving ahead now, and we can do a bigger deal. It's not really going to address the root causes of that trade imbalance.
And you were
Two is,
yeah. Well, no, continue.
Well, I was going to say, and then the big category then is on the technology controls, right? How far will Beijing push on the easing of U.S. tech controls? And just like I was talking about earlier, that sliding scale, to what degree does that compromise the U.S. national security agenda? Purchase agreements are part of this. Investment agreements could get interesting, but again, that would entail probably compromising in the U.S. ICTS agenda when it comes to critical infrastructure and trying to purge that infrastructure of Chinese inputs and avoiding those dependencies.
Well, let's talk about that NVIDIA AMD deal a little bit more in granular terms, because some trade policy experts have called these deals blackmail, arguing that they violate the U.S. Constitution's ban on export taxes. What do you make of that?
Well, I mean, there is a constitutional provision, right, that is staring us in the face. Now, who's going to take up that argument? If the companies that want to sell into the China market have an interest in doing so, they're not necessarily going to raise an argument against it. And as we've seen with other lawsuits, right, these take time to build up. It doesn't necessarily stop the administration's actions. And we still need to see the evolution of the U.S.-China bilateral. We could reach another point in this kind of crisis reset loop that we're in with China, where right now we're experimenting with some kind of bargain with China. It will, I think, inevitably hit up against some very hard constraints. So at that point, could we see a retrenchment where maybe the H20 access into the China market gets overtaken by events?
And it's interesting to me, too, because these China chip curves, they were put in place over national security concerns. How, if at all, does imposing a tax help mitigate that risk?
Well, they're separate objectives, right? And so this is where the administration is trying to do a lot at once. And we know revenue generation is a huge part of the trade policy, right? As we're seeing a lot of the bilateral deals shake out in 15% as a baseline. So now we see the administration applying that to export controls, which again, it opens up all of these arguments around, okay, what's the justification around that? Where are the national security concerns? And inevitably, that's going to get into compute governance proposals around how are our chips being tracked in China? What are the oversight mechanisms? Does that mean you actually engineer the chip to track it? Or are we going to send BIS auditors into Chinese data centers? I mean, it opens up a lot of questions, right? But also, what is the importance of inference compute as we are still in the early stages of AI diffusion and we haven't seen fully all these physical AI applications, areas where China can be very competitive. And are we just seeing a delayed reaction to this, where inevitably the US is going to realize, well, one, there are economic competitiveness concerns. Two, China can hold hostage a number of critical inputs to all the areas where the US wants to build out in industrial AI, in factory automation, upgrades in robotics, humanoid robots, all these different areas. And then three, the core national security premise behind many of the original chip controls, which was to say these are force multiplying technologies and that the US needs to basically create a paradigm shift in export controls to get preemptive with them.
And finally, Riva, NVIDIA and AMD, they have the scale and the leverage to negotiate such deals with the White House. What challenges does this pose for some of those smaller U.S. tech companies that don't have that kind of negotiating power?
Well, personalities matter here. The clout of the company matters. I think TSMC will be very important to watch because it's already made significant investments in the US. But the US wants to shake out more from Taiwan to include an understanding to where TSMC is bringing its cutting edge IP to the US. Right now in Taiwanese law, that's prohibited. So I imagine that's still going to be on the radar for Trump as he's proceeding with the US-Taiwan bilateral. So more to come on that. Also connected to the Intel story. So Lip Bhutan is expected in the White House this week. He's under a ton of scrutiny. And what is going to be the Intel makeover, right? As the US is searching for who's going to be the American chip champion out of Intel's failure, potentially. Does that entail a TSMC stake? Does that entail creating a consortia of a number of other companies that could even tie in major investments coming from Japan? There are a lot of possibilities around this. And so more to come on the chip front.
All right, more to come here. Riva, thanks so much.
Thank you.
Well, President Trump sharing an update on tariffs and gold. Here with the story is senior markets reporter Inez Ferre. Inez, what do we know?
Yeah, Ali, President Trump saying that gold will not be tariffed. So that has put the industry at ease, but that has also sent gold down more than 2%. Now, gold had been down because last Friday we had learned that the White House said that it was going to be issuing some type of clarification, executive order with respect to gold and tariffs. This is after gold went into complete confusion, or the gold market did, because of reports that said that some Swiss gold bars that are imported into the U.S. would be tariffed. So that sent the futures market here in New York much higher to record levels. And in fact, the price between the futures market in New York and gold prices elsewhere abroad was there was a big difference there. And that is because of the confusion that it created and sort of what it meant for the futures market, whether they would have to gold would have to go through some other places because traders were trying to avoid those tariffs when it comes to gold imports. Now, what's happened is everything has settled back because the White House has clarified that imports from Switzerland do not include those gold tariffs, something that had really put a lot of confusion into the market.
Inez, thank you so much for the update.
Thank you.
We're just getting started here on market domination. Coming up, stablecoin issuer Circle is set to release its earnings Tuesday before market open. But what does Circle actually do? Market domination breaks it down after the break. Plus, why is AMC Theater stock popping this afternoon? We're taking a deeper dive. And later in the hour, what would an initial public offering for Fannie Mae and Freddie Mac look like? We'll have an expert on to discuss. Those stories and more, stay with us. Let's talk stablecoins, a fast-growing part of crypto that's catching the eye of regulators and investors. Most stablecoins are pegged one-to-one with the US dollar, so think of them as a digital version of cash living on the blockchain. Unlike Bitcoin, which can swing wildly in price, stablecoins are built to do one thing: stay stable. That stability makes them useful not just for crypto traders, but also for everyday things like payments, sending money across borders, and even saving. Central banks and fintech firms are testing stablecoins as the backbone of the new era for faster, more efficient global payments. But there are risks. Their reliability depends on what's backing them, usually cash or U.S. treasuries, and how trustworthy the companies issuing them actually are. Big names like Circle, PayPal, and Tether are already in the game, issuing their own stablecoins. And as this space grows, stablecoins could become a cornerstone of digital money, as long as trust, transparency, and regulation can keep up. The stablecoin manager Circle has surged more than 130% since its June IPO. That's when it began trading on the New York Stock Exchange at $69 a share. But despite that jump, some investors may still be unclear on exactly what the company does. Here to break it down for us, we're bringing back Yahoo Finance senior markets reporter Inez Ferre. So Inez, can you explain Circle's business model and why investors are so excited about it?
Yeah, that's right, Ali. And this all circles back to, no pun intended there, to their stable coin, the USD coin, which they issue, which this company issues. This is a coin that is backed by the US dollar. And what Circle does is for every stable coin that it issues, it holds a reserve on that. So it will hold most of its reserves are in short-term treasury bills, T-bills. And what the company does is it earns interest on those reserves. So if you see that interest on the T-bills going higher, this is a good thing for stablecoin. As far as other ways that the company makes money, it also has transaction fees that it charges as well, services fees, especially for enterprise clients. And then you also have other services that the company provides, like institutional minting. They also have reserving, redemption, foreign exchange services. So there's a myriad, but really that interest income is what it is the most important as far as revenue for this company is concerned. And there are two main issuers of stablecoin. You mentioned Tether earlier. That is the big one. It is used a lot abroad, the Tether stablecoins. But in this case, Circle is really sort of the runner-up. And the reason why Wall Street is so bullish on the stock is simply because if these issuers are big buyers of short-term treasury bills, this creates demand because if stablecoin is adopted more and more, which is what Wall Street is expecting, then this will create demand for short-term treasury bills. And thus, the government will want to work with stablecoin issuers because it's a big buyer of their debt.
And Inez, Circle is reporting earnings on Tuesday for the first time as a publicly traded company. What are you watching?
Yeah, so we're going to be watching what they report. According to Bloomberg data, Wall Street, the consensus is for them to post an adjusted loss per share of 8 cents with revenue of 647 million. In their S1 filing, they have talked about their revenue jumping year over year. And what analysts are really going to be paying attention to is what the company is expecting as far as distribution growth, expanding their distribution. And now that the Genius Act has been passed and put into law, and this creates really guardrails for the stablecoin industry, what this means for the company, especially given that there are Wall Street analysts that have sort of sounded the alarm about the growing risk about two things. One is, if the Fed starts lowering rates, what will that mean for income for a company like Circle? And then the other one being the increased competition, because you will have increased competition with respect to stablecoins. And what is Circle doing as far as that increased competition? But make no mistake, I mean, a lot of Wall Street is very bullish on this stock because they really see Circle as a pure play, because this is a company, a publicly traded company. Tether is not. And so this is the way that investors can sort of get in on the stablecoin action.
All right, Inez, thank you so much. And be sure to tune in on Tuesday at 11 a.m. Eastern when Circle's co-founder, chairman, and CEO will be sitting down with Yahoo Finance for an interview following the results. You won't want to miss it. Now time for some of today's trending tickers. We're keeping an eye on shares of AMC, Strategy, and C3 AI. Starting with AMC Entertainment, pairing earlier gains but still in the green after reporting second quarter earnings that beat revenue expectations. The movie theater chain is benefiting from big U.S. blockbusters like the Minecraft movie and Lilo and Stitch, citing a 26% jump in attendance. AMC is seeing a recovering box office on the back of stronger consumer demand. Revenue grew 35% year over year. And still with me is Hope King. And Hope, I've been tracking the Hollywood movie business for some time, and it's been really interesting to see this post-pandemic recovery. But this year in particular feels like a turning point for a lot of these companies, especially with that theater attendance. I mean, 26% year-over-year jump is no joke.
No, it's no joke. That is because movies are back, so there is something to actually watch when you go. For me, the big story was premium. There was so much emphasis in their results on the premium auditoriums operating at nearly 3 times the occupancy of regular auditoriums. What does that mean? It costs way more these days to go to the movie theater. So if you are going, especially here in New York, you're spending at least $50 between 2 people getting those seats and your popcorn. And these theaters are capitalizing on the demand for premium seating, demand for movies that you need to watch in theaters, like an F1, like these big blockbusters that you just mentioned. And so the key, I think, for these theaters going forward is to capitalize on people who can pay up and having movies, again, worth going to theaters for.
Yeah, I saw F1 in IMAX, and it definitely was worth it. And also, even though it's becoming a little more expensive to go to the movies, it's a relatively cheap option for families outside of some of the other types of entertainment out there, so something to continue to watch here. But moving on to another stock we have our name on, Strategy. Shares are climbing today, boosted by a surge in Bitcoin prices and some recent regulatory progress in the crypto space. The Michael Saylor-led company is the largest corporate holder of Bitcoin. The company just added another 155 tokens. That brings its total holdings to nearly 629,000 Bitcoin. Crypto stocks are also getting a lift following a recent executive order from President Trump that allows 401k plans to include cryptocurrencies. And look, we know Strategy is one company that continuously leans on Bitcoin. Michael Saylor, he wrote on social media, quote, "If you don't stop buying Bitcoin, you won't stop making money." So he's just continuing to be bullish on the crypto.
I mean, I think opening this market, nearly $9 trillion market for 401k plans to choose crypto, is giving this boost. And I think any company that has ties to crypto, to Bitcoin, to digital assets, follow the policy, you'll follow the money, you'll follow the stock. There's usually a correlation or at least a connection between when they hit their highs and when the actual policies are announced and when these new, really, like life-changing opportunities for people who have never been able to invest on their own, giving that over to professional money managers to actually look at their portfolios and see what they can do versus having to figure it out on your figuring it out on your own. I think that's a big benefit, I think, for the entire crypto industry.
Yeah, and Strategy started really aggressively buying Bitcoin around 2020, and since that time, we've just seen this cryptocurrency rip higher. So potentially maybe more bullish moves ahead. And also C3AI, that's plunging after reporting preliminary quarterly results set to come in 33% below its previous guidance. D.A. Davidson analyst Gil Loria says the results were catastrophic in a note that downgraded the once AI darling to an underperform. The company is currently working to find a new CEO following Tom Siebel stepping down due to health reasons. Loria says that leadership changes will spell more disruption for C3AI. And like I just said, this was an AI darling. Now we're seeing this stock just absolutely take a tumble. Seems like, though, this could be a company-specific story and not really a problem for the AI trade at large.
Yeah, I think the story here is key man risk. I mean, you've got the founder and the CEO saying that because he wasn't as involved in selling, that's why they've seen such a dramatic decline. I think that is a warning sign to all companies, if you are founder-led, that you are the person setting the pace and setting the sales strategy and setting the relationships. I can't help but think about what Salesforce did at the end of last year, saying from Mark Benioff, the CEO, that they were increasing their sales force to be able to get AI products out there. If you are a C3 AI and you're going up against a Salesforce with a 2,000-man sales force going out there to sell AI products, you are in a lot of trouble. So it is both a company issue, but also industry-wide. More people need to be out there selling AI products.
Yeah, with the losses that we're seeing today, that brings the year-to-date decline over 50% lower, and we will be seeing full results and updated guidance on September 3rd. Bullish is setting its sight on a Wall Street debut, and market enthusiasm appears to be high. The crypto exchange firm which is backed by Peter Thiel, is gearing up for a major IPO Tuesday on the New York Stock Exchange under the ticker symbol BLSH. And now it's reportedly stopping taking orders at 4 p.m. Eastern Monday, one day ahead of pricing. That's according to Bloomberg. Right now, Bullish is targeting a valuation of nearly $5 billion. This moment could be a litmus test if investors believe in crypto platforms. The digital assets exchange and CoinDesk owners offering has attracted demand for multiple times the available shares. Earlier Monday, Bullish increased the offering to 30 million shares at $32 to $33 each. That's according to an SEC filing. Bullish Exchange is a regulated global digital asset trading platform offering spot, margin, and derivatives trading. Bullish, the venture capital arm of it, is headquartered in New York. The crypto exchange is HQ'd in Georgetown, Cayman Islands. Its CEO is former NYSE president Tom Farley, and we'll have continued coverage of this Bullish IPO later this week. Ford has announced a new line of electric vehicles, putting emphasis on affordability and mass production of the automobiles. Yahoo Finance senior autos reporter Pras Subramanian sat down with Ford CEO Jim Farley to talk about the move. Take a look.
It's a huge change for us. We're going to change the way we build vehicles, maybe the way the industry builds vehicles. We're going to build a vehicle in 3 separate pieces and join them at the end of the process. That allows us our workers to get inside the vehicle and to kit the parts, not on the side of the assembly line, but in the vehicle. The whole vehicle has been engineered for radical simplification as well. We have 20-30% less parts depending on the vehicle. It's just a totally different approach for simplicity. And we have a new battery chemistry, LFP, that we'll make in Michigan. It's a $5 billion bet on U.S. manufacturing. We think this is the way to beat and beat BYD.
So Jim, that first vehicle will be a mid-sized pickup, I believe, with more space than a RAV4 apparently. Why do you think that's the best sort of footprint for that car now? And I understand that more cars will be coming after.
Yeah, we'll have different body styles. We want to start with the most universal car. This is what we think Henry Ford would have loved. Because a RAV4, let's say the best-selling passenger car in the U.S., great car, it's a hybrid. We have the Escape hybrid. This has more room inside, but then you have lockable storage with the front, and then you don't need to carry your bikes and all your work equipment on the roof, or with the tow hitch mounted system, you can all put it in the bed of your truck. This is a more universal vehicle. And we have a lot of other innovations we haven't shown people yet, where this mid-size truck will really not be a truck anymore. It's more like the ultimate next generation crossover.
So Jim, is this sort of the way that Ford and other, even Western automakers, can take on the Chinese, even Tesla, with sort of the smaller footprint, simpler manufacturing process?
Yes, this is it. This is a way to go. Look, we can go like others do and make their affordable EV in South Korea and Japan and import, but that's not what we're doing at Ford. We challenged ourselves 3 years ago with the Skunk Works team to approach everything differently. Radical simplification, new battery chemistry. The battery's actually the vehicle structure itself. It's not put in the vehicle, it is the vehicle. We build the seats on the battery, build the front and the rear separately, and combine it. This radically reduces our cost, including a 30% cheaper battery chemistry, and the battery usage is much lower than a BYD, like 20% more efficient. And we think this is the way we can make money on EVs. We've learned a lot. We've been number 2 to Tesla for a couple of years. We've been doing our homework for this next investment cycle, and this is the way for us to be competitive.
Do you think the loss of the EV tax credit is something that might play into this and make it easier to sell cheaper EVs in general?
Yes, absolutely. We've learned so much, but that $7,500 is going to go away in September. It's going to have a big impact on the market. And we didn't know that when we started designing this vehicle. We wanted to just make a profitable vehicle at entry. But what we started to learn is, look, people want to commute. That really, the duty cycle that matches an EV on the retail side, not commercial side, is definitely short-term trips. Someone who charges at home, they go no more than 300 miles on a charge, and they don't want to go to the gas station. And for them, this vehicle will be cheaper to operate than a RAV4 hybrid or even a 3-year-old Model Y, and there's a lot of those on sale. this would be a lot cheaper for those customers. Not for everyone. We have Super Duties and Broncos and Mustangs, but for that subset of people, this is a much cheaper. They can spend that money on vacations and a lot of other things.
Policy sort of weighs in here. You mentioned with the EV tax rate, but also we're talking tariffs, and that's sort of affecting the affordability question. What's your sort of big high-level picture on what's happening here with, preliminary trade deals with Japan and South Korea, but still higher tariffs on Canada and Mexico, where we build a lot of trucks and using U.S. parts? What's your take on that?
Well, I think I'm optimistic that we'll find a way to work through the issues in Canada and Mexico. We're disappointed. We want a level playing field. 15% tariff in South Korea and Japan, not a level playing field. That's still a $5,000 advantage to import. But we're not gonna focus on that. We have a great relationship with the Trump administration. They're totally aligned with us as the biggest car company in the U.S. They want us to make these billion-dollar investments like Louisville today, and we are going to find a way, working with Howard Lutnick, the Commerce Secretary, the President, his whole administration, we are going to find a way to minimize those parts tariffs on America's biggest car company. We cannot be disadvantaged by betting on America, and we have confidence in the President that we'll work this through.
The Trump administration may be pushing ahead with plans to take mortgage giants Fannie Mae and Freddie Mac public, potentially valuing them at $500 billion combined. This comes more than a decade after a government bailout, but what would that mean for investors and the industry? Joining us now is Chris Whalen, chairman at Whalen Global Advisors. So Chris, Fannie Mae, Freddie Mac, they're already publicly traded, but remain mostly owned by the government under that conservatorship. So what exactly would the proposed IPO mean for the everyday investor?
Well, first and foremost, the government has to get paid. So what it's going to mean is that the existing shareholders, I own some Fannie Mae I picked up a couple of weeks ago as a short-term trade, are going to be massively diluted. The federal government will probably end up owning over 90% of the entities. Once they exercise their option, they also have to get repaid for what's called the liquidation preference, which essentially means the money that Fannie and Freddie have put back on their balance sheet, the capital that they have accumulated, Treasury wants to be repaid. And fair enough. I mean, Treasury is giving them a full faith and credit guarantee, and they need to be repaid for that. So it's going to be a tough road, I think, for the common shareholders because like GM, like AIG, the Treasury wants to get repaid.
Now, reports say that the IPO could raise around $30 billion by selling a small portion of the government stake. Is that enough, though, to change how these companies operate and maybe reduce some of that government control? It sounds like you say no.
No, these companies are worth a lot more than $500 billion if they're managed correctly. I work with a lot of mortgage lenders. I'm actually at the California Mortgage Bankers meeting today out in Los Angeles. And I think that what I've said is buy back the common shares. We should only have the federal government as a voting shareholder of both of these entities. And then we should issue a lot of a new preferred security. And we could easily repay the government back hundreds of billions of dollars over the next 4 years. That, to me, is a really exciting proposition because it keeps these entities, which will always be backed by the federal government, no matter how we window dress it, they will always be backed by the Treasury. That's the reality. You can't have common shareholders if they don't have control. So where should the private capital be? It should be in the debt markets and in a preferred with a very handsome coupon, but underneath, say, JP Morgan. If you look at where the Morgan preferreds trade today, the Fannie Freddie duopoly, or maybe just one entity, would be well below that. And it would be a risk-free preferred in a market that wants income right now, Allie. What do if you talk to investors today, what do they want? They want income. All the banks are buying back their preferreds. There's a huge opportunity here, I think, for the Treasury to raise a lot of money.
So you just said that these will always be backed by the government, but considering they're profitable, considering they provide a lot of liquidity, should they be released from that government conservatorship?
Yes. Yeah, I think they should, but I think we should take the opportunity to undo the mistake made by Lyndon Johnson when he first privatized these entities. We pretended they were private, but they weren't. And we have the documentation to prove this. The U.S. government, the Federal Reserve, when I worked at the Fed in New York, we always told people that they were backed by the federal government, regardless of the legal technicalities. So I think let's do this the right way this time. We're going to raise the money to pay Treasury back. Congress would certainly welcome $500 billion in cash right now. And then realize that ultimately to back a $7-8 trillion conventional loan market, you need government backing. And by the way, if we do it this way, Ali, we don't have to talk about implicit guarantees. You don't have to go talk to Moody's. Because what will happen if we just take them out and sell stock is as soon as the US government goes below 50%, Moody's, S&P, the rest of them are going to have to rate Fannie and Freddie as private companies. And they will not be the same as the United States. They'll probably be a single A.
And finally,
so I don't think that's a desirable outcome.
Right, and we only have about 30 seconds here, but there's talk of merging the two, Fannie and Freddie, to improve efficiency. What's your view on a potential merger?
I agree with Bill Ackman. I think it's a good idea. When we created Freddie Mac, it was like taking Adam's rib. They were supposed to compete with each other. Today, the GSEs compete with JP Morgan. So by all means, we should merge them together and just have one.
All right, Chris, there's so much to talk about here. We'll have to have you back. Thank you so much.
Oh, yeah.
Well, we're wrapping up today's market domination. Don't go anywhere. Stay tuned for the closing bell.